If you've been watching the markets recently, and I don't just mean crypto, I mean metals, bonds, currencies, you've probably felt it. Something just feels unstable. Prices move fast in both directions. One minute it feels like everything's lining up, the next minute narratives flipped completely. And quite often you're left staring at the move thinking, that doesn't really line up with what's actually going on underneath. So today I want to talk about silver. Not as a trade, not as a prediction, but because what's happening in silver right now actually explains a lot about what's going on across all markets, including crypto. This isn't a hype video, there's no price targets here, and I'm not interested in conspiracy rabbit holes either. This is just a zoomed out look at how markets behave when liquidity tightens, confidence becomes fragile, and the structure of the system starts to matter more than the story everyone's repeating. If you're new here, I'm Paula. On this channel, we zoom out and we connect macro, traditional finance, and crypto so you can understand why things move, not just react after the move has already happened. So let's start with silver, because it's quietly telling us a much bigger story than most people realise. For a long time, silver sat in a strange position. It was partly a monetary metal, partly an industrial one, but not really critical enough to be treated as systematic. If it went up, it went up. If it fell, it fell. It didn't force anyone to rethink how the wider economy was priced. That's no longer true. Silver today sits right at the heart of modern economies. It's in solar panels, electric vehicles, grid infrastructure, semiconductors, data centres, electronics, medical equipment, all the things governments are actively prioritising for growth, resilience, and technological leadership. And unlike many raw materials, silver isn't easily replaceable. You don't just swap it out without losing efficiency or performance. So when silver prices rise, that increase doesn't stay theoretical. It flows directly into production costs, margins, and long-term planning decisions. That alone makes silver far more important than most people realise. But to understand why this matters now, you have to look at supply, and more importantly, who controls supply. China sits at the centre of global industrial supply chains, not just as a manufacturer, but as a processor, refiner, and exporter of critical materials. And over the last few years, China has been very clear about one thing. Strategic resources are no longer treated as neutral commodities. They're treated as tools of policy. We've already seen this with rare earths, gallium, germanium, materials that most people had never heard of until export controls suddenly reminded the world how dependent modern economies really are. Silver fits into the same pattern, and this is where yesterday's announcement matters. China confirmed that from January the 1st, new rules will come into effect governing how certain strategic material exports are handled. This isn't being framed as a ban, but it is a tightening. More approvals, more oversight, more prioritisation of domestic demand. That distinction is important because China doesn't need to cut exports to zero for the impact to be felt. Even small changes introduce friction into global supply chains, longer lead times, less predictability, higher costs. And this is happening at the same time China is aggressively expanding solar, EV production, grid infrastructure, and AI capacity, all of which require silver. Some more silver is being pulled inward domestically. At the same time, less flows outward internationally. That's not ideology, that's arithmetic. For Western economies that rely heavily on imported refined materials, this creates pressure almost immediately. Not shortages you see overnight, but tightening conditions that build quietly in the background. And now add one more layer. Silver pricing is still dominated by futures markets like COMEX, where leverage, positioning, and liquidity can move price far faster than physical reality. That creates a tension between what silver represents economically and how it's priced day to day. So when silver starts accelerating under these conditions, rising industrial demand, China tightening export controls from January the 1st, and supply growth already constrained, it doesn't just look like demand picking up, it starts sending uncomfortable signals. A rising silver price feeds directly into inflation expectations. It raises questions about the real cost of electrification. It pressures corporate margins, and it forces bond markets to reconsider whether rates can realistically fall without consequences. And this is where another layer gets added, one that often gets overlooked. Because while silver is being pulled by industrial demand and geopolitical strategy, large financial institutions have also been positioning quietly in the background. In particular, JPMorgan has become one of the largest holders in physical silver in the world. Not paper exposure, not derivatives, actual deliverable metal. Over several years, JPMorgan has accumulated hundreds of millions of ounces of silver, held in vaults linked to futures delivery systems. And banks don't do that by accident. They don't stockpile physical metal for short-term trades. This is long-term positioning. When an institution like JPMorgan holds that much physical silver, it's effectively saying that silver will be more strategically important in the future than it is today. They don't need prices to explode tomorrow. In fact, lower prices arguably help them accumulate more. Time works in their favour. And this creates a really important dynamic. On one side, silver prices are still discovered in leveraged paper markets that can be pushed around in the short term. On the other side, a small number of powerful institutions are quietly locking up physical supply. Paper prices can be managed temporarily. Physical scarcity can't. So now you've got rising industrial demand, China tightening export controls from the 1st of January, constrained supply growth, and major financial institutions absorbing physical inventory, all at the same time. That's when silver stops behaving like a normal commodity and starts behaving like a strategic asset. And that's where things get uncomfortable for the system. A tech stock going vertical is speculative excess. Silver going vertical is a systematic signal. Because it doesn't just say people want silver. It says inflation pressures may not be as contained as advertised. It says energy transition may be more expensive than planned. It says supply chains are tighter than models assume. And systems don't like signals that force multiple assumptions to be revisited at once. This becomes even more sensitive during periods of thin liquidity like Christmas, when it doesn't take much pressure to exaggerate a move and expose the tension underneath. Now zoom out even further and you realise this isn't just about silver or China or one bank. We're moving away from a world where resources flow freely to whoever pays the most, and towards a world where resources flow according to strategic alignment. Energy, food, metals, technology, all of it is being politicised again. This shift really began with energy. Russia and Europe showed the world what happens when energy becomes a geopolitical weapon. Since then, every major power has been reassessing vulnerabilities. Who controls supply? Who controls processing? Who controls settlement? And once energy becomes strategic, everything downstream becomes strategic too. And that's where silver's role in energy transition becomes critical. Governments want electrification, renewables, and grid expansion, but they also want low inflation, manageable debt, and political stability. Those goals don't always align. If the materials required to build the future economy start rising sharply in price, something has to give. Now layer in de-dollarisation. For decades, the global system ran on the assumption that commodities are priced in dollars, trade settles in dollars, and trust in the dollar underpins everything else. That system isn't collapsing, but it is quietly being tested. Countries that don't want to be fully dependent on the dollar system are building alternatives, bilateral trade agreements, local currency settlement, commodity-linked trade. And blocs like BRICS are increasingly vocal about reducing reliance on a single monetary anchor. In that kind of world, hard assets matter more. Not just gold, but industrial metals like silver that sit right at the intersection of money, manufacturing, and energy. And this is where crypto fits into the picture. Crypto didn't emerge because people wanted another speculative asset. It emerged because people wanted an alternative to systems where pricing is dominated by leverage, supply chains are politicised, and signals get managed when they become uncomfortable. That doesn't mean crypto's immune. Crypto experiences the same leverage flushes, sometimes more violently, but structurally, Assets like Bitcoin represent a response to the same underlying tension. Silver exposes stress in the physical economy. Crypto exposes stress in the financial system. Different assets, same direction of travel. So if the market moves have felt confusing, frustrating, or even slightly unsettling, you're not imagining it. These aren't random swings, and they're not just sentiment. They're a result of a system under strain, trying to balance growth, inflation, debt, and geopolitics all at once. And once you start seeing markets through that lens, you stop reacting emotionally to every headline and start understanding why the same patterns keep repeating. That's what we do here. If you want to understand the exact strategies we use to make money in both the bull market and the bear market, we've made a completely free course for you. The link is in the description. And if you found this video useful, give it a like. It genuinely helps the channel. And if you want more calm, macro level breakdowns that connect traditional finance and crypto without the hype, subscribe to the channel. Thank you so much for watching, and I'll see you in the next one.